It's this idea that if go on.
No, sorry.
You want me to hit the buzzer?
Yeah.
All right.
No.
I'm saying it. But yeah.
Why buzzer? Why buzzer?
I don't know.
Because people don't know what the Laffer curve is.
Oh, right, Laffer curve.
Clearly, I'm not trusted to explain what the Laffer curve is.
Should we talk about the Laffer curve?
Our producer.
Well, that's another.
I think the eloquent description that you put was, if taxes are, 0, the country raises no money. If taxes are 100%, the country raises no money, because, at 100%, no one's going to work. And it wouldn't be just a step down. There's got to be a curve between that. This
A
point,
bell-shaped curve.
Yeah, this point where it tips.
Now, of course, the problem with that description is every step in it is wrong. So, it's an accurate description of the Laffer curve.
Okay.
But if taxes were 100%, it is not true that no one would work. I mean, I work for no money because I enjoy it and I want to do it, and there are other weirdos who are similar to me, so that's not true. If tax was 0%, well, there are some weirdos, not me, who give money to the government voluntarily. So the description isn't quite right. And the idea it's a smooth curve, I mean, in the social sciences, you never see nice, smooth curves. Apologies again to everyone listening to this who can't see my finger in the air. And probably apologies to people who can, because it's not actually very helpful. But the basic proposition is correct, that there is for every tax, there is a point where if you raise the tax, you will get less money. So in the 1970s, the top rate of income tax was 98%.
Right, that's crazy.
No one who had advice paid that. There were a zillion things you could do to not pay it. So when they cut that rate, I am certain as anything that raised more money. But what applies to a 98% tax rate does not apply to a 45% tax rate.
And that's when the Laffer curve was thought about, was in this kind of high tax environment.
The very same people who argued at the time that cutting tax would raise money, and in some cases they were correct, still make that case now, when I think it's pretty clear it's not correct. So it's a political tool more than it is a useful economic theory.
But you think that on middle earners or on the income tax rates, we might be at the Laffer curve, like at the tipping point?
There's been some pretty compelling research by rather lefty economists as to what is the tipping point, where is the tipping point. The tipping point's a bit above 50%. Now, if you currently are a additional rate taxpayer in the UK paying 45% tax plus 47%, plus 2% national insurance, and then you had employer national insurance on that, which ultimately employees bear the cost of, your tax is right at that point. And there are plenty of points on the salary curve where you can be paying a higher marginal rate than 55%. If you're earning £100,000, your rate is over 60%. If you get free childcare and you earn £100,000, your marginal rate goes up to 20,000%.
Yeah.
So there are definitely points in our tax system where you could be cutting tax, and conceivably that would bring in more revenue.
That was a clip from our chat with tax expert Dan Needle. If you want to watch the full episode, you can click right here.